Hello guys and welcome to another post market analysis of Bank Nifty. Today is November 20th and we are open today after 3 days of holidays. It was a pretty long weekend and we are on a Bank Nifty daily chart. So this is the candle we are representing today's price action of Bank Nifty, and then from the past many days we are talking about this trend line. Okay, we have seen that this trend line got break, and also we have this support and resistance area was intact from a couple of weeks and even months now. Okay, so now after this breakout we have seen a kind of moderate confirmation, even though if it is not very strong confirmation. We were talking, even in our weekly analysis we were talking that if you see any close only above this level we'll go bullish on the Bank Nifty, or if you see any close below this level we have to be bearish in the Bank Nifty. So in this, in either of these two scenarios, nothing has happened today, because we have seen a gap up opening and finally we have seen a candle like a spinning top. This candle is a spinning top candle that was uh, okay. So this is a spinning top candle that we have seen today. So it was a huge volatile market today, and in the Nifty it is very trendy day today. But in the Bank Nifty we have seen both and upside and downside moments on this particular day. So we are still sticking to our rules. What we said last week, we will be bullish only after this. If you see a breakout on the weekly. Not on a weekly but on a daily time frame with a proper confirmation, will be bullish, and again keeping that as your target levels. And then towards the downside, if you see any downward momentum, downward close below this area with a proper confirmation, then we can be bearish. Or if you see any breakout here with a proper below this line, since that is the lower boundary of your support area, even breakout from this with a proper confirmation candle following that can be taken towards the downside with this last blue line as your targets. But from the past few days or a week, we're seeing market going in absolutely the sideways direction. Okay, so here you need to be very careful while trading in this sort of markets, because Bank Nifty is hugely volatile. We are not seeing a very strong momentum. Please consider the fact that Bank Nifty from November 17th has gone into the sideways momentum. So always keep that in mind while you trade on an intraday level. So now let's go back to our 5 minutes chart and see what we can learn from here. So if you're following our videos, you know exactly where to take trades and where not to take trades. So now this green zone is coming from our a daily time frame chart, where this is a resistance now, earlier it was support which got broke. So we know that we are not supposed to take any trades in between this. Only if you see a pretty markable, if you can define a pretty a good support or resistance on an intraday level, then you can take a trade. Otherwise it's not very advisable to take trade anywhere between this area. So I hope you are aware of this point before we go further. So now, based on, and we have also discussed the same point in many of our post-market analysis videos before. Okay, to start with, market has opened at a gap up opening of 43,860 levels, but from there it has not seen. If it is so bullish, it would have seen a greenish momentum, bullish momentum from right from there. But that's not the case. The first three candles of 5 minutes have seen a bearish momentum and ended in red candles. So this is the place where we have seen the a bullish engulfing pattern. Also, in our earlier videos, in our one of our shots, we said that uh, whenever you have a support which is not broken, that is coming from yesterday. So all this is a support area from yesterday, right? You see this swings are not getting, they didn't get break. Okay, so this entire support area is acted as a support zone even for today. And after this bullish moment, after this bullish engulfing pattern, look at the Bank Nifty. It never came down below the low of this bullish engulfing pattern. But those who are not aware of this point to draw a support and resistance level from yesterday, and still waiting to form a swing high and swing low, even for them we have there was an opportunity, because you see that swing low is giving us an opportunity to draw a support area, because if not from yesterday, at least today, after seeing this bullish engulfing pattern, excuse me, now you know that you need to draw an intraday support level there, and after seeing this reaction from the top, and after prices seeing after bank nifty moving towards the downside at 10:10:05, you know that again this is also a resistance area. This is a swing high, and that can become your resistance area. But before drawing that resistance area, you know that this bottom line of your resistance area coming from the daily chart is going to act as a very important level. So you need to look at the price action there. So this is the first candle that got broken into that resistance area, but haven't seen any confirmation candle there. Okay, so after which you have seen a red candle which is also an inside candle, but that you cannot take a trade here, because if you want to take a trade there, yes, of course, inside candle is a reversal candle, but you cannot take a trade there, because this whole area coming from the previous reaction is your resistance area, right? Okay, so this whole thing is a resistance area because of this wick. So in this case, your stop loss would have been so large, so that is not recommended to take a trade there. So even if you're see, even your risk versus reward ratio is not 1, it is close to 0.95, but it is not 1. So you don't have to hurry up your trades to in order to get into a trade. So that's okay to wait for the proper breakout towards the upside of this. So again here we have 10:35 and 10:40 candles representing a bearish engulfing pattern. But then again, see, your target is right at this support area. So you cannot we cannot really get into a trade at these candles, because on the left side that is forming at right at this support area. This, you see, this many reactions were there. So if you have seen a close somewhere here, then you can take this as your target. But in this case it is not, so that was not recommended. So here you again you have seen a breakout towards the top side, but again the upside, sorry, but then you haven't seen a follow through candle after that. So the where do you get exact confirmation is, see, here you have a breakdown towards the downside, and then here is this candle forming a bullish engulfing candle. And according to our bullish engulfing pattern rules, if your previous candle is a doji candle, that becomes that it will improve the importance and um, of your moment. But I even don't recommend this was not a perfect trade, because it is not coming after an up move, it is coming after a pure sideways momentum. So I would wait for the breakout and the proper confirmation candle, which happened here at 11:55. So if you notice, 11:50 and 11:55 candles have seen a close above this, and also this is the first time where we have seen prices coming from the bottom and seen two closes and on each candles, I mean next to each other. See, whereas here it is not, because you have not seen prices going down, prices are still hovering there at this level. So in here, whereas we have seen prices getting closed, have tried to go down, and then couldn't go down, and then came back into this. And also there is no a downside confirmation candle here. Okay, so that improves the significance of these two candles. Okay, so if you are entering there, okay, if that was your entry, so you should also always check for our risk versus reward ratio. If that was our entry, our stop loss would be just below this line. You should either see a candle getting closed and under this, or you'll wait for the target, not just any whipsaw is a stop loss. You should remember that. So on the left side, if you see, okay, so this becomes your important level on the left. Okay, that becomes your important level on the left because of this reaction. So after that, this becomes your important level. Okay, so market has reached with these levels. Okay, so it has reached this level, and it has also reached this level. So when the market was at this level, you would have trailed your stop loss and got your stop loss there. So I would take this down to only this much, where we have seen only 17 points in the bank nifty. But that is absolutely fine, because it is not about how many points that you achieve, it's about how good you are following the rules of your strategy. So in this case we have seen only 17 points. Okay, well, just write it down there. So you don't have to be greedy to catch the entire momentum. You only take how much ever your strategy gives you, or in terms of profit, or even in terms of loss. So after this, I can remove this. We would have removed these two lines, and then wait to see what market would have done. So what market have done intentionally after this is, see, we this was a kind of swing high, and after that we have seen a breakout from there, and then again you have a confirmation candle there, but again you can't take a trade because of the huge stop loss that uh, it is going to come with. But after that you can see, that becomes uh, that becomes your resistance area. Okay, so because we don't have to, we cannot take trade in between, so we would have waited there. Okay, here this is the place which is getting again interested. This is the second time Bank Nifty is going to give you an opportunity. So in this case you would have entered into this candle without waiting for this candle. You know why? Because earlier you have seen a breakout towards the downside, but then you didn't see a proper confirmation candle there. Instead you have seen a harami pattern, which is also an inside pattern. So whenever you say a harami pattern after a downfall, in this case it is a huge downside moment on the Bank Nifty. Here itself you would have taken a trade, but those who want to be little more sure about your entry would have waited for this candle to get closed above this, and then in this case here we would have entered. So in this case, you can think of stop loss, okay, as, see, if you are entering, it is subjective. Okay, if you are entering there, so those who are very aggressive would have kept their stop loss there, where their stop loss was very less, and obviously the target was that. Okay, those who have seen the market like this would have made a good profits. Okay, but those who have seen the markets in this perspective, where you want to entry, where you want to take an entry there, the whole scenario is going to change for them. See, here in this case you have 41 points, but let's always assume the worst. So if you are entering there and that was your stop loss, obviously there was no trade for this candle because of the risk versus reward ratio. Okay, but then those who know that this is a failed breakout by seeing the second candle, and those who know that this is an inside candle and also a haramid candle, would have taken entry there. Those would have made profit, but I'm not considering this moment as profit at all because of this candle. It depends on it depends on each individual's perspective, how you see the charts. Even though the charts are same, these are same 5 minute candles, but depending on what strategy you use, depending on what candlestick formations you know, it's going to vary how you read the market. Okay, so let's be on a safer side. Okay, let's be on the second side of this transaction, and let's assume that you have not seen this trade. So after that we really have not even even though this is a bullish candle, we need to see 3 points. One is our candlestick pattern, second one is the location, and the third thing is your risk versus reward ratio. So none of those are getting activated here. So in spite of seeing this much of momentum on a Bank Nifty, uh, it's not sad to see only 17 points. In fact, you should be really glad and really happy that you are not emotionally pushing yourself to take trades to get into to this kind of momentum. Until and unless if you are following the rules, if not today, Bank Nifty is going to be there forever. Okay, you'll see Bank Nifty, this is not the last day of Bank Nifty, so you don't have to worry on that part. So what is important is you stick to your own strategy, and then trade the markets with that particular strategy rather than with your emotions, especially with your greed. I hope you have learned something out of today's post market analysis. That's it for today. See you in tomorrow's post market analysis. Thank you so much for watching.